Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will share an update on housing inventory, a Zillow survey. Rents continue to trend downward despite what the Fed tells you, and the debt deal. Today is Monday, May 30th, 2023. I am Byron Lazine, and the Hot Sheet starts now. Welcome back after the 3 days off to the internet's only housing show that goes live every single day that the markets are open, 9:30 a.m. Eastern, 6:30 Pacific time, and then whatever other time zone you're in. I'm sorry. I'm just naming the two coasts. I apologize for that. I know I've gotten roasted a few times in the comments. I hope you had a great weekend. Hit the thumbs up, and let's just jump right into it. I got a little fired up on Twitter this morning coming in to the show. Elon Musk yesterday tweeted at David Sachs. Of course, Elon and David Sachs did that whole entire Twitter Spaces that got a lot of news last week. But he tweeted at an update that David Sachs put on commercial real estate, specifically office in San Francisco, which we've been covering a bunch here, and how it is going down and hard to find tenants and all of that, right? All stuff we know and stuff that we've been talking about. So here's Elon's tweet. And it's in reply to, oh boy, here we go. We don't want to see the comments. They're probably insane. So here's Elon's tweet. Commercial real estate is melting down fast. Home values next. David Sachs was talking about LA office towers are selling for less than the amount of debt on them. This is true for San Francisco too. And we covered this last week on the Hot Sheet. So we were well ahead of David Sachs on that. All right. But I had to quote tweet Elon's tweet. So let's go back to that. Let's go to my tweet. And this is just a good reminder for everybody. This is the stuff we've been covering here. But these are good talking points to have when someone wants to pontificate about home values. And there's nothing wrong with Elon having a guess or his opinion on home values, but he says home values are going to melt down. Well, 42% of homes do not have a mortgage on them. Okay, so that, to me, that's 42% of homeowners who probably aren't going to sell their home at a meltdown price when they don't even have a mortgage. 85% of current mortgages are below 6% fixed. This year is trending. We're going to get into inventory here in a second. All-time low for new listings. This is worsening the inventory crisis. So for home values to melt down, in my opinion, like meltdown would be 20% plus. That's how I'm going to categorize meltdown. And I don't know how Elon's categorizing it. But for a meltdown to happen in this current housing environment that we have right now, this mild recession coming, or this recession, it has to be worse than the Great Depression and the Great Financial Crisis combined. Just my opinion. Elon obviously has this. Now, do I believe that home values will come down before the end of this year? Yeah, actually, I do believe that. So I think home values are going to come down in quarter four like they did last year, and like they do seasonally most times in the winter when you look from when you look at the rolling 12 in any market, not month over month. We know that we saw a whole bunch of month over month gains for years, right? But when we look at the rolling 12, typically in the winter they come down. Now, Schiller just this morning, just to kind of dispute a little bit more of what Elon says, the gold standard of home price index said that March home prices went up 0.4%. This was just released this morning for March. Obviously, we've already got that data from sources like Black Knight and Zillow and others that said March was up, but now Schiller verifies what some of these home price forecasters have been saying all along. So Schiller had us down month over month, July, August, September, October, November, December, and January, and now up in February and in March. Listen, I think you could have some red in the fourth quarter. So I think home prices come down, but a meltdown to me is not losing even what we lost last year, 0.8% one month, 0.8% another month. You'd have to sustain that for, a long period of time like we did in, call it 2007 to 2011 timeframe, right? I don't see in this environment that getting anywhere close to happening. Let me know in the comments if you agree with that. And let's get into our inventory update here, as we always do, typically on Mondays, but today on Tuesday. All right. According to Housing Wire's market tracker, active inventory grew 8,914 week to week. But new listing data, as I quoted in that tweet, is still trending at all-time lows in 2023. Obviously, rates went up as high as 7.14 last week. They went soaring up. We're going to have an update on that here at the end of the show. Obviously, the debt, hopefully, deal is done. We'll see if that gets done before the deadline on June 5th. And the impact that that'll have on rates. I'll have an update for you at the end of the show here. All right. Let's take a little closer look at what the inventory looks like. Again, we went up almost, between 8 and 9,000 from 424,000 active listings to 433,000 active listings. As referenced here, are homes that are on the market, right? Not the NAR inventory, which includes pending sales or escrow sales. Same week last year, we rose from 338 to 357,000. So a much bigger jump in inventory the same week last year. Less inventory overall on the market. The inventory bottom for 22 was 240,000. The peak so far in 23 is 472,000. We're well off the peak right now. Active listings for this week in 2015 were 1.13 million homes active on the market. We're well off of what we would consider a normal market. 2015 is more of a normal market for active listings. Of course, we're nowhere near that level. You can see new listing data is even trending well below even 2021 and 2022, which were almost near all-time lows, and we are about to set a near all-time low for new listings, which is going to reflect in our existing home sales. As you can see, now we are trending at 4.28 million for seasonally adjusted rate of monthly sales, is according to NAR. In the last 12 months, you can see in the bottom right, has continued to go down. When you don't have the inventory, you're not going to have the sales. When you don't have the sales and the inventory, and you've got 42% of homeowners that don't have a mortgage, it's going to be hard to envision a meltdown of prices, which would be 15, 20, 25%, in my opinion, on a meltdown category. Okay. That's your update on inventory right now. Let's go to a Zillow survey that was just released last week. We covered it on Knowledge Brokers Podcast. You can go check that out at Knowledge Brokers Podcast, where myself, Lisa, and Tom went into this pretty deep. I just want to give you the overview here. A new Zillow survey shows that 55% of buyers turn to real estate agents for financing advice. Only 32% credit a financial institution, and 30% credit a website for providing the education that they need. Okay, so if you're an agent right now, if you're advising somebody on the home buying process, you've got to do more than say, hey, talk to my lender. All successful buyers, 55% of them go to the agent, the realtor, or the broker for their financing. First-time home buyers, 58%, and even repeat buyers. So they've already met a mortgage professional. They've already gone through the mortgage process. And when they go for financing advice, 53% of the time, a repeat buyer goes back to their agent. So the value that an agent is bringing has got to far exceed, hey, talk to my lender. This is the person I use. This is who I send everybody to. They're the best. They pick up the phone. You've got to know your facts on the financing day to day, how it's changing. It's why we're doing this show, because every single day you've got to sharpen the pencil a little bit more. You've got to know the updated information. Month over month information is outdated at this point. It just is. And the interest rate 2 weeks ago was almost 3/4 of a point less than it is today, right? So staying sharp, being able to educate clients, this is going to be the difference in 5-10 years as AI eats up transaction coordination, as it eats up, some of the things that agents do day to day right now, where they trick themselves saying, well, I'm really working hard. I'm doing all these things, like showing a house, like opening the lockbox. All that stuff can be AI automated. Accepting things on showing time. All that stuff can be AI automated. And I'm not trying to scare anybody. I'm just giving you the reality, right? And so if consumers want the value of the advice, the consultation, again, 58% of first-time homebuyers are going to their agent for financing questions. then we should be equipped to give them the answers. We should be equipped to be able to explain what's going on right now in the market, what's going on with the 10-year. 2 episodes ago on Out Knowledge Brokers podcast, we had George Ratu, former chief economist of Realtor.com, current chief economist of Keeping Current Matters. He explained the relationship between the 10-year and the 30-year beautifully. Go check that out if you haven't caught up with that one yet. Financial institution, again, first-time homebuyers, only 33% going there. More first-time homebuyers will go to a website. So having something on your website, 38% of first-time homebuyers will go to a website for their advice. Now, here's the scary part, right? A whole bunch of them go to their friend, relative, neighbor, or colleague. Pretty good reminder for agents, brokers, team leaders to be calling past clients right there for sure. All right. This survey, you can find it on nowbam.com. Break it all down with other facts. 28% found it very or extremely stressful to save for a down payment. That stress was more prevalent among buyers of color, 34%, and first-time buyers, 41%. 71% of buyers made at least one sacrifice to build enough savings for a down payment. The most common sacrifices were spending less on entertainment and postponing or canceling vacation plans. 73% of buyers paid mortgage insurance, while 27 did not. That number was pretty big. I was a little shocked by that. So all the data is down below. If you click on all the slides that we share, all the sources that we share every single day, you go to the daily download down below in the description of this video. Click it once, you get it sent to you every single week, whether you're on the live stream or not. All right, more evidence is out that rents are going down, despite what the Fed tells you that inflation is really high and that rents haven't come down and that rents are still going up. That's not the case. Rents are continuing to go down. We've been reporting this here on the hot sheet, along with Redfin and Homes.com and Apartments.com data has shown us this really for the last 6 weeks. Barry Sternlight, the CEO of Starwood Capital, who controls 125,000 doors, apartments across the U.S., his models have shown that rents are coming down. They're coming down actively. They're coming down right now. In your market right now, are you seeing that? Are you seeing that rents are coming down in your market? The market that I'm sitting in right now, I can tell you that here, and this isn't the evidence. I'm going to share with you the Bloomberg article in a second. But right here in Naples, I've just got an anecdotal story. My parents sold a house last year at the peak. They picked up a rental. They picked it up for $3,500 all inclusive, in electricity and all these different things. They were happy to get in there. It was the only property in that community that they were able to get a rental for those numbers, right? Everything else was taken. Okay. They just moved out because they bought a new place now, and that's going to get ready to close. So they just basically ended the lease. Okay. Their apartment, they're tracking it in this community, is competing against 9 other condos. Okay. So this rental is competing against 9 other condos right now. And instead of asking the $3,500, the asking price already came down to $3,250. And you're seeing others drop. They're going to have to accept $3,000 or maybe $2,800 on this, where just last year people were fighting over it for $35,000. People were bidding up the rentals in this particular community. Great location, very convenient location in Naples, Florida, right? So rental prices are starting to come down. Another sign here in the luxury sector, according to Bloomberg, there are still plenty of houses to rent in the Hamptons. We're talking about post-Memorial Day weekend. The cost of vacation properties has dropped as the pandemic real estate frenzy cools off a bit. It's not too late to book a summer rental in the Hamptons. Last year, I was in the Hamptons for a couple of days, and it was packed. There were people everywhere. The hotels were obnoxiously priced. I'm sure the hotels will be obnoxiously priced again this year, but you couldn't get a rental this time last year in the Hamptons. Well, you can today. The average nightly rent to rent a home in the Hamptons is $970, down from $1,080 in 2022, according from data from Stay Marquee, vacation rental company. The drop comes after 2 years of surging prices, with more people traveling to Europe and other destinations that took a back seat during the pandemic. Okay, so you can say, well, this is tied into a lot of people doing that type of travel or whatever. I don't know. There's signs that the summer travel, while it'll be robust, it'll be strong, is not as strong as many believe it might be. We'll see how it plays out over the summer. Okay. Southampton Seclusion. Here's a property here. July 2023 price 110. July 22 is now 100 and or I'm sorry, now it's 110. It was 120. Here's a Village Fringe Luxury East Hampton, asking 60,000, was 70,000. I know these prices are crazy, but this is the Hamptons. Art Village Retreat was asking 75 last year, now down to 60. $15,000 haircut. Sandpiper Spindrift. Ooh, look at this one. Maybe a little Bam Bash over at this part. We could liven this place up a little bit. July 22, 75,000 this year, 68,000. Wow, I like that one though. North Fork Waterfront, 50,000 last year, 40,000 this year. And there you go. So there's just some examples in the comments. What are rents? What are typical rents doing right now? Rents are still high. Karen says in LA, still high. And I get it. Listen, these prices are still high. I mean, for sure, 75,000 down to 68,000. I'd say still high. But are they lower, and are there more opportunities to negotiate right now than this time last year? Love to know. Jody says that in OKC, rents are continuing to climb. Many pay 1,500 plus. Love to know what they were paying last year. Okay. We're seeing across the country that rents are coming down. Some places they may be coming up. Totally get that. But across the country, rents are coming down. We've covered that here in the last few weeks. Redfin and others have reported that. So this will be a good thing if rents come down, by the way. We want rents to come down. That data hopefully will come out of inflation. Hopefully inflation will drop like a hat once that lagging data catches up, and the Fed can stop grinding the economy as they have been. Love to know some more, some more market updates on rent prices. One update that we've got here is the debt deal. Okay. So, and how this is going to impact the 10-year. Biden and McCarthy came to an agreement, but now we got to get Congress all to agree. You've already got some outliers in both parties over the weekend say, I'm not going to vote for this. And so it's going to face its first crucial test. GOP leads the House. They're going to have the first crack at this thing. So we'll see what happens. They need to come to a deal before June 5th, which is Monday. Okay, so we've got this week to come to a deal before Janet Yellen says that we are going to have a situation where we run out of cash unless they act, and a failure to pay by the U.S. to pay its bills on time could have wide-ranging consequences. The existence of an agreement would likely blunt the damage from Congress missing the deadline. You obviously have the Fitch rating putting us on watch. Not that that means much. They had like SVB as a grade A, right before they collapse. So I'm not sure they know what the hell they're doing, but anyways, they did put the U.S. on watch. All right, now what is this news of a deal done to the 10-year? Well, there is some good news here. The 10-year is dropping today. If this deal comes together and gets finalized, I believe, and like we talked about last week, this is going to drop significantly, and we could get an interest rate back down to around 6.5 pretty quickly. Okay, we're sitting at 3.742. This could be enough today to drop us back below 7. If we get a deal, this thing's going to drop even more. We did end the week on the 30-year fixed at 7.14. We basically sat the entire week up above 7%. We started at 6.95 on Monday and continued to rise to end and ended the week at 7.14. Again, just 2.5 weeks ago, we were under 6.5. So this was an incredible jump as the debt deal uncertainty continued to brew. All right, there's your update for today. Please consider hitting subscribe here on the hot sheet. If you're enjoying this, consider sharing it with someone who could benefit from a 24-hour look back on housing. Today here on the channel at 2 p.m., myself and Nicole White will be premiering a new Real Word podcast. Love to have you subscribed and tune into that later. And if you enjoy Hot Sheet, please consider hitting the link down below for BAMX. Become a better agent. Everybody tells you what to do. We show you how to do it on BAMX, plus our private Facebook community you can only get access to if you are a member of BAMX, where we're sharing things that we're sharing nowhere else on the internet. And we may start doing some of the Q&A from this show over to BAMX. So make sure you get subscribed today. There's a hot sheet discount to get 15% off the annual subscription on BAMX. Go jump in there today. And I believe today, actually, we have a live stream with the BAM video producer, the lead producer, Bobby, is doing a live stream later today. So make sure you get in on their hot sheet code, gets you 15% off the annual. When you break it all down, it's less than a cup of coffee a month. So jump in there, hot sheet code, 15% off the annual subscription of BAMX. Hope you guys have a great start to the week. If you took yesterday off, let's have a great Tuesday, and we'll see you back here tomorrow. Until then, toodaloo.